Hey guys, it's Lindsay with the Rockwell Group and eXp Realty. I'm here today with James Beard.
Hey.
And we're going to be discussing how the recent events in the banking industry affects mortgage. So if you like this video and find value in it, make sure to like, share, and subscribe, and stay tuned for more videos. So today we'll be talking a little bit more about the banking industry, and we're right here in the middle of March, almost towards the end of March. And recently, as many of you know, we've had a lot of things shaking up the financial industry. So we've very much seen a couple different banks kind of folding, and it's sent a lot of panic through a number of different markets. And we're going to be talking today with James Beard. And James owns, go ahead.
Well, I'm a mortgage banker with Cross Country Mortgage. Been a mortgage banker for 34 years, which I always joke, so it makes me feel old, but long time. And have a pretty good sense in the field of mortgage banking. And mortgage banking is helping people on their home loans, FHA, VA, conventional loans.
Yeah, so James is super experienced, especially here in the Rogue Valley. He's one of our preferred lenders. He works in a number of different states. So he's a great resource to really touch on these topics when it comes to how the recent shakeup in the banking and financial sector is really, if it's affected our market, if it hasn't, what we think for the long term. So that being said, what do you think about the recent fold of, so there was 3 banks, mostly in Silicon Valley, doing a lot of different lending practices. So do you think that really affects people that are purchasing a home now or even in the next 6 months to a year?
Right. Well, when you think about it, it doesn't necessarily immediately impact when you're buying a home. Actually, if you think about it, the Fed has been on a war path of raising interest rates.
Yeah.
So it's a great place to pause and say, what does that mean? The Fed raising interest rates necessarily doesn't impact a 30-year mortgage. It influences them, but it doesn't impact them. When the Fed raises the discount rate, that's typically on car loans, short-term loans, your credit cards. Think of it this way. The Fed wakes up and realizes the one thing they were supposed to do didn't happen. They didn't stay on inflation. So they have moved in unprecedented times to raise rates faster than ever in the history of the US, twice as fast as the 80s.
Yeah.
To do what? To try to get everybody to slow down. So what's so unique about this time right now is with the Fed trying to squash inflation, raise the discount rates, 30-year mortgages are more inflationary sensitive. So you've seen 30-year mortgages go up because of inflation, but actually with the banks having trouble system worldwide, it's caused the Fed to slow down. They realized they even needed to pick up speed. So they were looking at, could be another half to 3/4, but they only did a quarter. They're going to need to push this down the road a little bit for the next month or two. That gives inflation a chance to grow a little bit bigger. So by the banks closing, it actually caused them to pause and not be as aggressive. It's a tightrope right now.
So they were they were like taking their foot off the gas a little bit.
Yep.
Okay. So what exactly does that mean for people looking to borrow and buy in this industry now?
Well, think of it right now, we're in unprecedented times because when can you have ever thought there's such a shortage of homes?
Yeah.
Shortage of homes. 18 months ago, according to the Builders Association, nationwide, we were 4.5 million homes short. Way more people than there are homes even available. In the recent weeks, they've come out with new figures. We are officially at 6.5 million homes short.
Wow.
So what happens is this, as soon as rates do even come back down a little bit more, thousands of more people will hit the streets to buy homes. Those that purchase a home right now and over these next couple months are probably looking to have values really get pressured to go up. So you're supposed to make purchases when maybe not everybody's doing those purchases, not when everybody's running out there. So,
and that's a good point. Actually, right now, we're coming up on the end of March. Traditionally, this is when the market starts to ramp up a little bit in terms of buying homes. So that kind of correlates exactly with what you're saying.
Yep. Very special time for people to get out there and purchase homes now. What they don't want to do is when rates do move down, and there's some articles out there that talk about rates dropping down in the 4s at the end of the year, but we'll be back to 10, 15 offers on every home. That's not a fun time.
Do you think that that's going to happen? Because, we've looked at a ton of different conflicting things, right? A lot of people are saying that rates are going to continue to go up, and then some people are saying rates are going to continue to come down. So what do you think that might actually happen with the rate?
Well, as far as, look at it this way, there are more people that want to buy a home than there are homes. If you throw in the slowing of building during coronavirus, if you even look at the slowing of the building now, the cost of what it is to build, builders needing to take out construction loans that are at some of their highest rates that they've seen in a long time, because the Fed raising the discount rates affects them in order to borrow money to build, because that's short-term money.
Right.
So all that slowness is making the problem worse. So what do I see? I see that if people don't figure out how to get comfortable to get out now to purchase a home, they're going to be with the masses
later. More competition later.
It will take years to catch up with the inventory that we need for the amount of people that need and want to buy a home.
Yeah, and those people that are looking to wait a little bit, and they might find themselves in a more saturated market with other competition, other buyers. If they talk to your friends, like we experienced during the height of COVID in late 2020, 2021, especially, we had a huge ramp up in people purchasing homes then. And I mean, we were talking 20 offers within, 2 days of a house being on the market. And it became really, really difficult for licensed realtors like us at Rockwell
Very stressful.
to do our job, right? It became, because we had to break a lot of hearts. You were competing with 20 other qualified offers. And eventually, people kind of started settling just to get into whatever home that they could actually win the escrow on.
So you get a sense of two groups of people. Those that have probably bought 2 or 3 homes before, I feel like have more of a sense that this is a unique time to buy. Those that are more first time, second time home buyers sometimes feel, well, maybe we'll wait for the rates to drop.
Sure.
But when the rates drop is where you'll have tens of thousands of people all buying at the same time.
Right.
So what you do is, how do we help people to not just qualify, but to feel comfortable with their payments now? There's a number of ways to do that. Get the home, and then when rates do drop, they all have a chance to do a refinance. It's a great way to look at it right now.
And so, I mean, overall, does it, the recent banking issues, does it make the market a little bit more unstable? Not really. I mean, it doesn't totally affect.
For buying.
It doesn't really affect most ordinary people unless you're buying in Silicon Valley. For the most part, things are still on an even keel. The Fed is still moving at that same pace and trying to curb inflation and make it so that we get back to normal, that everyone can buy a home. And
that's a really, really good point. And to the point of when we first started, the fact that these banks have had trouble has caused the Fed to slow down on their aggressiveness to raise rates. But just because they raise rates doesn't mean that rate raises on 30-year mortgages.
Right.
The rates they're raising are on short-term, mortgages are long-term. They can be influenced a little bit, but they make the 30-year mortgage makes its decisions more based upon the economy going forward.
And that being said, traditionally a lot of the advice that we give people if they're looking to buy is, within that time period, you don't want to start taking out short-term credit anyway, because that's going to affect your credit score right off the bat. We tell people all the time, don't open any new credit cards, don't go out and buy a brand new car, especially don't quit your job, those things. And so that goes hand in hand with what we're saying. And you wouldn't want to anyway. It's not going to be in your best interest now, because where it's going to affect you is where the Fed is raising the rates on the short-term loans and not the long-term. So keep the long-term loans, like the eye on the prize on the horizon. You want to keep doing what you're doing, saving money, and put that towards your down payment on a home.
When families are sitting there, they're discussing, do we buy the new car? Do we buy the home? Always look at the home first. You can do the car next, but the car payments drastically affect the home purchases right now. It's an amazing what just a couple $100 would do in a payment and affect them for purchasing a home.
And a couple $100 makes the world a difference when you're talking about monthly payments.
I would say that if you actually even took a $200 more in a car payment, could be necessarily as much as $39,000-$40,000 less of a home. That's amazing.
That's a huge difference. That makes all the difference in the world when you're really looking at if you need like a 2-bedroom versus a 3-bedroom, vice versa.
If anything right now, now's the time. Get those credit cards paid down. Get them paid off. If you're tempted to use them, don't use them. Look at the back of the sheet. You'll see the rates are higher than you've seen in years and years.
That's a really good point. If people are concerned about the market right now and the way things are going, maybe get with a lender, maybe come in and see James Beard. They can do a ton of different forecasting. They actually helped me buy my first home. And with that forecasting, what that looks like is when you meet with them early on, they can say like, oh, you have different pools of debt. So you have your car loan here and you have credit cards here, but maybe not focus on one that has a higher interest or one that is a higher balance. They'll actually forecast what's going to make the best adjustment in terms of your credit score long term. And that helped me tremendously when I went to go buy a house.
That would be a great way to analyze things. If someone's thinking about purchasing in the next 12 months, it's like come in way ahead of time. Let's analyze this ahead of time. More than likely, just like you did, after that meeting, you'll begin to prepare, save, and pay off things in a different way after that kind of a meeting.
And you'll be able to really focus on the things that are going to make the biggest amount of difference when it comes to actually purchasing the home versus worrying about, something that might not make that difference.
Lindsay, one of the things that I've discovered probably over the last 6 months, more than I've seen in years, is families that are approved for a larger home, but they're feeling conservative because of what's going on with the banks, what's going on in the economy. So they feel where their payment needs to be limits them to, say, a $325 home instead of the $450 they really need. But there are tools available for them if they'll come in and structure a plan that fits them where they can have those lower payments for the first year or two. What's unique is sellers are willing to help more times than not over the last probably 4 or 5 months where they haven't been for the last 2 years. I think that window will go away, but for them to purchase a home now versus 3 to 4 or 5 years from now, I think will be quite surprising.
All right, guys. Well, thank you so much for tuning in. And if you found value in this video, make sure to like, share, and subscribe. And again, today we were talking about the banking industry and what that looks like in terms of purchasing your home. And definitely make sure to pop in and give James and his staff a call or see them here over on Crater Lake Avenue. Where are we at?
I think they call it Crater Lake Highway right in front of PetSmart, but they're welcome to call the office at 541-770-2727. Love to have you come in and have a cup of coffee and we could discuss it.
Yeah, definitely. Get with him and his staff. They're amazing people. And make sure to stay tuned for any more videos that are upcoming that can help you along your journey to buying a home or selling or investing. So thanks, guys.